Moving to Panama can feel like stepping on a tropical paradise, and it may dramatically lower your taxes for the average American dreaming of living abroad. Panama offers one of the most tax-friendly systems in the world. In this video, we will break down why Panama is so appealing for expats looking to lower their taxes, covering everything from Panama's territorial tax system and income tax rates to residency visas and other taxes you should know about. No tax expertise needed, just a willingness to imagine life in a place where the sun is warm and foreign income isn't taxed at all. Now, let's talk about it. Panama's territorial tax system. Panama's tax system is based on a principle of territoriality. This means Panama only taxes income earned within Panama. Any money you make abroad is not subject to Panamanian tax. Whether you are a Panamanian citizen, a resident, expat, or non-resident, what matters is the source of your income, not your citizenship or where you are living. If the income doesn't come from Panamanian sources, it's completely tax-free in Panama. For example, if you retire to Panama and your income is from the US Social Security or an investment portfolio back home, Panama will not tax those earnings. Similarly, if you work remotely from a US company or run an online business with customers outside of Panama, that foreign source income is not taxed here in Panama. This is a huge advantage. Many expats legally pay zero tax to Panama on their retirement pension, dividends, or remote work income originating from outside of the country. It's important to note that because foreign income is exempt, Panama's tax law doesn't even bother distinguishing between resident or non-resident for tax purposes in the way other countries do. In other words, unlike the US, Panama doesn't tax you on worldwide income regardless of your status. It cares only about what earns locally. This territorial approach is the cornerstone of Panama appeal as a low-tax destination. Personal income tax rates in Panama. So what happens if you do earn income from within Panama? Don't worry, Panama's income tax rates are relatively low and progressive, meaning higher earnings are taxed at higher rate. As of 2025, the tax brackets for individual income are 0% tax on the first 11,000 of Panamanian source income. This portion is tax-free. 15% tax on income between $11,001 and $50,000. 25% tax on any income over $50,000. Of course, yearly. In practical terms, if you earn $60,000, for example, of Panama source income, say from a local job or business, the first $11,000 is not taxable at all. The next $39,000 is taxed at 15% rate. This results in a much lower effective tax rate than you may pay on the same income in the US, especially considering the US federal rates can be significantly higher than 25%. For example, imagine if you open a small business in Panama City. If you earn $50,000 in taxable profit in a year, you'd pay about $5,850 in Panama income tax, which means that Panama will not tax the first $11,000, but the rest of the money will be taxed at the rate of 15%. That is roughly an 11.7% effective tax rate on a $50,000 income, thanks to the generous zero tax band from the first $11,000. Furthermore, Panama provides various tax exceptions and exclusions that can reduce your taxable income. For instance, Panama does not tax certain types of income at all, such as interest earned from Panamanian bank accounts or government bonds. There's also a long list of other exempt income categories, including some dividends from small businesses, severance payments up to a limit, winning from lottery or gambling, and even inheritance and gifts. In fact, inheritance, gifts, and foreign earned money are all tax-free in Panama, which means you won't face an estate or gift tax as you may in the US. Panama has no separate inheritance or wealth tax at all. If you are an American expat in Panama, you will likely pay nothing to Panama on income coming from outside of Panama, and even local income, if you have any, is taxed at moderate rates with a chunk of it tax-free. This favorable setup allows many expats to drastically lower their tax burden while living comfortably here in Panama. Becoming a resident of Panama and why it matters. To take full advantage of a Panama's tax system and live here long-term, you will need to sort out your residency status. Thankfully, Panama makes this relatively easy, specifically for citizens of the US and many other friendly countries. Here is what you need to know. Tax residency versus legal residency. In Panama, you are considered a tax resident if you spend more than 180 days in the country in a calendar year, consecutive or not, or if Panama becomes your center of life, if you establish a permanent home and economic ties here. However, because Panama won't tax you on foreign income regardless, being a tax resident is not critical for avoiding Panama's taxes. It's already territorial. The more important aspect for expats is obtaining your legal residency in Panama. That allows you to live here beyond the tourist visa period and eventually apply for a tax resident certificate if needed. Legal residency is what lets you stay in Panama year-round and enjoy the benefits. And it can help you for the US tax purposes to show that you are a taxpayer foreign resident. Friendly Nations Visa. Panama has a program called Friendly Nations Visa, designed for citizens of friendly countries. And yes, the United States is on the list. This visa is one of the most popular pathways for expats. The requirements have evolved, but generally, it offers a streamlined route to permanent residency if you can demonstrate some economic ties to Panama. Example of such ties includes setting up a local corporation, obtaining a job offer in Panama, or making a certain investment in the country. One common requirement is a minimum bank account deposit, having at least $5,000 in a Panamanian bank account to show financial solvency. If you don't plan to work for a local company, Panama now often requires an investment for this visa. For instance, purchasing a real estate historically around $200,000 and $300,000 in value, or other investments as specified by current rules. In short, the Friendly Nations program is a quick route to residency for Americans, allowing you to live in Panama and, after meeting certain criteria, even seek permanent residency. Retiree Pensionado Program. Panama actively courts retirees with its Pensionado visa, often hailed as one of the best retiree programs in the world. If you have a lifetime pension of at least $1,000 per month from Social Security or a private pension, you can qualify for this visa. The Pensionado visa grants you permanent residency and comes with added perks like discounts on medical services, entertainment, travel, and more. Panama loves its retirees. Notably, there is no age requirement if you are, say, 45 and early receiving a qualifying pension, you can apply. Unlike some countries, retirement visas, Panama's program does not force you to purchase property or make any huge investment. It simply focuses on your pension income. Many Americans retirees take this route as well as Canadians. It's straightforward. and once you approve, your residency is granted for a lifetime with a protection from any future law charges. The only catch is that the pensionado residents cannot easily convert that status into citizenship, but most find the residency itself more than sufficient. Other residency options. If you are not retired and do not want to work locally, Panama offers investment visas as well. Apart from friendly nations, there are options like the Person of Means (POM) visa and others. For example, an investment in reforestation of around $80,000 can qualify you for residency. Buying real estate of a certain value, commonly $300,000 or more, is another pathway. Essentially, Panama provides multiple avenues. Invest in the economy, real estate, businesses, forestry, bank deposits, and more. Or show you have steady income and you can secure the right to live here. Once you have legal residency, you can come and go as you please. And if you spend more than 183 days per year in Panama, you'll be considered a tax resident and can even obtain a tax residency certificate from Panama's tax authority. This certificate can be useful if you need to show other jurisdictions that you are paying taxes somewhere, even if in Panama's case your tax may be zero on foreign income. Gaining residency in Panama is a fairly accessible process for Americans. The country welcomes expats, and with a bit of paperwork and either a modest investment or proof of income, you can secure the legal right to reside here for a long term. This is the first step to enjoying Panama's tax benefits, and thankfully, it's an achievable step for most. Other tax and financial considerations in Panama. Aside from income tax, here are other tax factors that an American expat in Panama should be aware of. The good news is that most of these are quite moderate. Sales tax. Panama imposed a 7% sales tax on most goods and services, known locally as ITBMS. Impuesto de transferencia de bienes inmuebles y prestación de servicios, in Spanish. This value-added tax is much lower than sales tax or VAT in many other countries. Basic food, staples, medicines, and medical services are generally exempt. A 7% tax on purchases means the cost of living isn't inflated too much by taxes when you go shopping or dine out. Now let's talk about property taxes. Panama recently reformed its property tax system to be more generous to homeowners. Owner-occupied residential properties or primary homes valued under $120,000 are completely exempt from property tax. If you buy a home above the value that I just mentioned, you only pay tax on the portion exceeding $120,000, and the rates are very low, roughly 0.5% to 0.9% of the value depending on the value tier. For example, a $200,000 primary residence would incur tax on $80,000 at around 0.5%, which comes out to only about $400 per year. That's very low by US standards. Secondary properties or investment real estate have a $30,000 exemption and then slightly higher rates up to around 0.8% or so. Additionally, new construction homes often comes with 10 to 15 years property tax exemption as a perk. Many expats find they pay little to nothing in property taxes, especially if their home is modestly priced or new. Capital gain tax. If you sell assets in Panama, like a local real estate or shares of a Panamanian company, there is a capital gain tax. The standard rate is 10% on the profit or the gain from the sale. However, Panama often collects an upfront withholding, for example, 3% of the sale price for real estate at the time of transaction as an advance tax. You then calculate the actual 10% on your profit and can claim back the difference if the withheld amount was too high. In practice, for most property sales, the 3% withholding is treated as a final tax if your profit margin isn't huge. 10% is a reasonable capital gain rate. Compare that to 15% or more in the US. And remember, this only applies to sales of assets located in Panama. Selling your US stocks or foreign properties while you live in Panama would not trigger any Panamanian tax. Dividend taxes. If you start a corporation in Panama or buy shares in Panamanian company, be aware that Panama does tax corporate profits and dividends if they are sourced from Panama. Corporate earnings in Panama are taxed at 25% normally. When those profits are distributed as dividends to shareholders, there is a withholding tax on dividends, typically 10% for Panamanian source profit. Interestingly, if a Panama company earns profit from foreign sources outside of Panama and then distribute the dividends, the withholding is only 5%, again, reflecting the territorial principle. Many expats won't need to deal with this unless you set up a local business. But it's good to know. If you simply hold investments through a foreign brokerage or have a US company, none of this applies in Panama. Social Security and payroll taxes. If you become employed by a Panamanian company or hire local employees, Panama has Social Security contributions. Employees contribute 9.75% of wage to Social Security, and employers contribute 12.25%. There is also a small educational insurance tax that will be around 1.25% for employees and 1.5% for employers. These are similar to payroll taxes like FICA in the US. However, if you're working for a foreign employer or freelancing for clients abroad, you should not be part of Panama's Social Security system, so this wouldn't apply. US expats who work remotely often keep paying into US Social Security instead, via self-employment tax, unless they switch to a local job. No wealth or inheritance taxes. As mentioned earlier, Panama does not impose any net wealth tax or state inheritance tax on individuals. Your assets and investments are not going to incur annual wealth taxes as they may in some European countries. And if you pass away as a resident, Panama won't take a cut of your estate. This doesn't eliminate US state tax considerations for Americans, but Panama won't add to the burden. Overall, Panama's additional taxes are either low or avoidable depending on your activities. Everyday cost of living taxes, sales, property tax are modest, unless you dive into local businesses or properties flipping. You'll find the tax bite in Panama to be minimum compared to what you are used to pay in the States. US tax considerations for Americans abroad. Before you start celebrating a 0% tax life, a friendly reminder: American expats are still subject to US taxes on their worldwide income, even if they move to Panama. The US is one of the few countries that taxes based on citizenship. So, Uncle Sam doesn't automatically let you off the hook just because you change countries. However, there are provisions that can dramatically reduce or even eliminate US tax while you are abroad. making a Panama move doubly beneficial. Foreign earned income exclusion. For 2025 tax year, the exclusion is up to $130,000 of foreign earned income per person. This means if you earn, say, $100,000 working remotely from Panama and meet the IRS bona fide resident test or physical presence test, you can avoid U.S. income tax on that $100,000 completely. If you are married and both spouses work abroad, you each get an exclusion, approximately $30,000 each. This aligns perfectly with Panama's system. That $100,000 is also not taxed by Panama because it's a foreign source income to Panama, resulting in no income tax to Panama and none to the US, either completely legal and above board. Now let's talk about foreign tax credit. If you do not end up paying any Panama income tax, for example, you have some local Panamanian income that gets taxed, the US offers a foreign tax credit. Essentially, every dollar you pay to Panama in income tax can typically offset a dollar of US tax on the same income. This prevents double taxation. In practice, since Panama's rates, 25% up, are lower than the US rates, high earners might still owe a little difference to the IRS on Panama source income. But many expats structure their finances such as either their income is foreign earned and excluded via FEIE, or is passive foreign income that Panama doesn't tax. So, no foreign tax credit needed because only the IRS taxes it. The result is often a very low overall tax bill. Now let's talk about state taxes. Don't forget state taxes. If you are moving out of the US to Panama, you will want to sever residency with your home state, if it has income tax, to stop state taxation. Establishing residency in Panama can help show you don't intend to return to your old state. Most states will not tax you once you are no longer a resident there. But check the rules for things like California or New York, which have strictly residency rules. The Panama residency papers, a home lease or purchase, and spending most of your time outside the US will support your case. Your new tax home is Panama. Reporting requirements. Living in Panama and opening local bank account or businesses means you may have additional US reporting, like FBAR, Foreign Bank Account Report, if you hold over $10,000 in foreign accounts, and possibly Form 8938 for foreign assets. These aren't taxes, but it's part of the life of an American expat to file a bit of extra paperwork each year. It's a small hassle for the big reward of legal tax reductions. Hiring a tax advisor familiar with expats issue it's wise, and many Panama expats does it. So get your CPA and get your tax low. In summary, moving to Panama can nearly eliminate your US tax liability if done correctly. But you have to use the available exclusion and abide by the rules. Many Americans in Panama ends up paying little to nothing to the IRS, especially if their income is under the FEIE limit, which is $130,000, or if they are retirees living on Social Security, which often isn't taxable at low level anyway. And Panama doesn't tax it either. The key takeaway is that Panama won't tax you on foreign income, and the US gives you tools to drastically reduce your own federal tax while abroad. With proper planning, you truly can enjoy a low tax life in Panama legally. Always file your annual US return through. You don't want to fall out of compliance with the IRS. even if you owe $0. Enjoying a low-tax life in Panama stands out as a top choice for Americans seeking both a better quality of life and a lighter tax burden. The combination of Panama's territorial tax system and U.S. expat tax benefits like the FEIE can allow you to keep much more of your income in your pocket. You could be strolling on a Panama beach or exploring rainforests instead of handing over a big chunk of your paycheck to the taxman. Not a bad trade-off. Of course, the specifics of everyone's situation is different. Before making the leap, it's wise to consult with a professional who understands both Panama and the US tax rules to ensure everything is set up correctly. How do you get started? One option is to reach out to a reputable international tax and legal service with Panama expertise. For example, the team at Relocate and Save has associates in Panama and offers guidance to expats on establishing residency and optimizing taxes. Our team of lawyers in Panama will be happy to guide you through the process as their side notes. Partners like this can walk you through visa applications, property purchases, and tax strategies, making your transition smooth and fully compliant. In conclusion, Panama offers American expats an almost unbeatable mix of warm climate, modern amenities, and a genuine tax-saving paradise. By making advantage of Panama's territorial tax system and aligning your U.S. tax strategy accordingly, you can live the dream abroad while legally minimizing your taxes. It's always recommended to get personalized advice for your circumstances, but thousands of expats have already made Panama their home and dramatically reduced their tax bill. If you like this video and would like to know more about taxes and how to lower them, give us a thumbs up, subscribe to our channel, or you can get a free consultation on our website, www.ndm.com.pa. See you in the next one.